Good evening, John Kelly for Options University on Friday, October 7th, 2011, your end of the week recap. Disclaimer here first, trading can be and always will be risky. It's why you're here at Options University, to get that edge, to put the trade in your favor. Economic news Thursday morning. Weekly jobless claims came in slightly above the week before and above that psychological 400,000 number. On Friday morning, everybody was anticipating 60,000 jobs from the non-farm payroll announcement and got quite a surprise, 103,000. The market shot up like a bullet. We'll take a look at that in a second. But as the news was disseminated and torn apart, it was discovered that 45,000 of those 103,000 jobs were returning Verizon workers from their strike. So that was sort of a disappointment. But there was other news on the non-farm payroll. July was revised up 45,000 to a creation net of 127,000 jobs in July, and that zero number from August that was such a shock was revised upward to 57,000. Both good shots in the arm in investors' eyes and for the economy. But in reality, the economy needs 125,000 plus jobs created every month at a minimum to keep the unemployment rate from rising above its current 9.1% level. Retail sales were also up in economic news, a surprising 1.5%. So we had that move down on Monday as worries and fears came in that the Eurozone bankers and ministers weren't going to do anything to backstop the expected Greek default. And then Tuesday, the statement came out that they were doing that. The market, in a matter of an hour and 15 minutes, reversed 400 points to finish with a buying tail, and then strong on Wednesday and strong on Thursday. Then the European news. Investors were happy to see that the ECB had put $40 billion in euros, 40 billion euros out there on a 12-month loan-back program for European banks, and the Bank of England had 75 billion in pounds that they put out there for their banks to strengthen their positions, anticipating a Greek default. And the German Deutsche Bank wrote down 250 million euros for their portion of Greek debt. Then the news hit 3:30 on Friday. Moody's downgrade of the Portuguese banks, and then they're also talking about possibly downgrading the Belgian banks. Belgian banks, Dexia, is in real trouble. French-Belgian consortium. And Fitch at the same time came out with a downgrade of Italian and Spanish debt. And then watch for this Sunday. Chancellor Merkel of Germany and Sarkozy of France are supposed to meet, and they expect an announcement out of there. So what we had Friday was the market had started off at a plus 100 and then had sold off, and then in the last 2.5 hours of the day, the market had come back to the daily highs at a plus 100, and then boom, the news on the downgrades hit the wires, and the market retraced a good 150 points in the next 30 minutes to close negative. But you've also got to realize on Friday that there had been 3 days of a profound move to the upside. It was a Friday. There was going to be Columbus Day on. There is Columbus Day on Monday. The bond market will be closed. The banks will be closed. That'll be about a quarter of the trading group that will not be doing anything on Monday. Senior traders were turning over their books to the junior traders Friday after lunch, taking off, and would not be back till Tuesday. So profit taking was the expectations. The initial move up on the non-farm payroll happened within the first 30 minutes of the open, and then the market proceeded to sell off the rest of the day with a rally from about 2 to 3:30, and then the news hitting the wire on the European downgrades at 3:30, sending the market into a tailspin. The VIX has been in this channel from the low 30 and change to 48. again, for about the last 2 months, had risen and almost touched on Tuesday morning that 48 level, 47 and change, and then fell a good 10%, a good 5%, another 2 or 3%. It was down below the 50-day moving average. And remember what happened here when it hit this bottom and touched the 50-day a couple weeks ago. It bounced, and we've been moving higher ever since. It hit that 50-day moving average and closed above it. It was down 2% on the day prior to the wire news at 3:30, and then finished up 2% for the day. So I'm going to show you a couple of images here of what's been going on. It's a sidelight to the news. Occupy Wall Street, which over the last 2 or 3 weeks has gained quite a bit of media notoriety. This editorial cartoon area pretty much says it all. You've got people that really don't know what they're protesting against. They're frustrated with what's going on in the economy. They don't know who to lash out at. Barack Obama this week also brings up an image where he complained about the banks were making too much profit, particularly in light of the bill now where Bank of America has decided to tag on an extra $5 charge for the use of debit cards, which was brought about by congressional legislation that Obama signed off on. And then the final image of the week of Steve Jobs, who died Wednesday night at the age of 56, left his widow with a portfolio and balance of over $8 billion. Who would you rather emulate? The Occupy Wall Street people, what Barack Obama and the politicians currently represent around the world, or Steve Jobs? I'll leave that with you and those thoughts with you. In stock news, Dollar Tree announced an additional $1.5 billion stock buyback in addition to the previous buybacks of $346 million and $415 million. This, of course, added the price of the stock rose in anticipation of that. Wynn Resorts was upgraded to outperform by Credit Suisse. The Macau resorts have been performing fabulously. We're going to take a look at the Wynn stock in the gold member section. And then Chipotle has been struggling, and we'll take a look at that also. A downgrade by J.P. Morgan to market perform. One stock I want you to keep an eye on here, GCO. Okay, it came up to and formed a double top here in the last few days, but what I want to make note of is that, of course, it's above its 200-day moving average here in purple. It's above its 50-day moving average in the light blue, but what you're seeing are the skyscraper tops of accumulation by the hedge funds. It is in heavy accumulation right now. The breakout off of this cup with a indeterminate handle pattern was not followed by a surge of 40% over average in volume. So I did not enter it for that reason, but I am going to keep an eye on it. Because of the heavy accumulation, I think it's a stock that will do well. Another stock under heavy accumulation with this, what I call a skyscraper pattern, with these periods of heavy accumulation where the funds really come out and announce their presence, is Alta Salon, ULTA. Again, riding above its 200-day, riding above its 50, and decent volume, and the distribution days are smaller volume, which indicates that there's not a sell-off. The institutional firms are staying behind this stock. So if you find a place to get in, when you see high volume coming in on the stock, they appear to be consolidating in a sideways pattern. These were the ones that would be on my watch list. So what do we look at? Amazon, Apple, AutoZone, and Chipotle in the gold member section next.